Hello, everyone. I'm Brian Becker with Richardson Financial Group. I'm here with my colleague, Dan Brown, and we're here to provide the monthly market update regarding the month of May 2021. We saw a little bit of an up and down market this past month. US markets finishing pretty much where they had started. International markets doing pretty well, having a positive return. But the big news this month that generated a little volatility, Dan, was the economic report regarding jobs as well as inflation. So before we dive into it, I want to remind everyone to look at the bottom of your screen and like and subscribe to our videos so that you make sure to receive them in your inbox each month. And with that, let's talk about the economy.
Thanks, Brian. Let's start with a review of the employment report that we saw in early May. Expectations were very high for job ads. In fact, consensus expectations were for about 1 million new employees being added to the rolls, and we only saw about 266,000 new jobs, so quite a bit below expectations. And a lot of economists are pointing to the fact that there's the extra unemployment benefits coming from the COVID care packages as a disincentive to seeking employment. So we're even seeing some governors withdraw those extra unemployment benefits. So we're not too terribly concerned about that jobs report. We saw some other very positive data a little bit later in the month that show that there's about 8.1 million job openings for the economy. So we're very encouraged by that, especially since that number is at an all-time high. So we continue to think that the labor market will improve as the economy further reopens.
Talk to me about inflation.
Sure, Brian. So mid-month, we saw some inflation data that caused some volatility in the stock market. Specifically, the consumer price index report came out, and it was much higher than expected. So specifically 4 times greater than expectations. And again, that caused a little bit of volatility for about a week or 10 days in the market. But then we saw Fed officials come out and very consistently talk down concerns about that, saying that they expect inflation to be transitory in nature. And a lot of that stems from the COVID-related shutdown we saw last year, causing some bottlenecks and some supply chain issues. And as it relates to the Fed specifically, we saw some Fed minutes come out from their last meeting back in April, and they sort of acknowledged the higher inflation, and they acknowledged that their very accommodative monetary policies could be causing some higher inflation. So it's possible that they could draw back on some of that accommodative monetary policy later in the year. So just to recap real quickly on what the Fed has been doing, they lowered interest rates greatly, and they've also been doing bond purchases on a monthly basis to the tune of $120 billion. So it's possible that later this year we'll see them pull back on those bond purchases. So this is referred to as tapering. And again, it's our expectations that we'll see that later this year. And lastly, on inflation, we went back and looked at the last 5 instances of higher inflation. And broadly, stocks do fairly well during that environment because they can pass along those higher input costs to their clients. And we think that's happening current day. So we think stocks will fare pretty well in a higher inflationary environment. So Brian, do you want to give us a quick recap then?
Absolutely. So what we talked about were jobs, where there are some people still seeking unemployment, but due to the large number of openings available, we don't think that there's going to be a lot of disruption there. 2, inflation, we think it's going to be transitory, right? So that means it's temporary in nature. It's just the economy working out the kinks from all the supply chain issues that were created because of the COVID shutdowns. And then last thing is 3, economic policy, looking at the Fed Reserve Bank. Don't fight the Fed. They're going to keep accommodating for the foreseeable future and just sit back and watch the support. So that's it for our monthly update. Thank you everybody for watching. If you can again, please reach out and like and subscribe in the corner, and we will send you another update soon. Thanks.